All right, so hello everyone again, formally. My name is Dr. Antoine Perry, and I am a Senior Policy Analyst for Higher Education and Workforce Issues here at NEA. And among the many teams that I work on, the student debt team is one where I've devoted countless hours because, as you are aware, we know that student debt remains a huge issue for us. So we're so glad that you could be here this evening. We have a full program. We have lots of things that we want to cover within this hour. But before we get started, I just want to remind you again that if you are in need of closed captioning for this meeting, in the Zoom toolbar, please click on the gray closed captioning box, and you should have no trouble accessing closed captioning for this meeting this evening. This evening, we're going to hear a little bit of background about how we got here, how student debt became such a major issue in our country. And also, we're going to hear an overview of the Public Service Loan Forgiveness Program, specifically the temporary waiver for public service loan forgiveness. And then we will also have some time for question and answer this evening. I do want to tell you, and I'll share this as many times as I can throughout the hour, but if you do have questions, we're going to, again, attempt to answer as many questions live as we can. But in order for us to not miss your question, we encourage you to use the Q&A box specifically, rather than putting your question in the chat. Again, if you do have a specific question about your situation or a general question about public service loan forgiveness or the waiver process, we're asking you to place all questions in the Q&A box, as those are the questions that we will recognize once we get to the Q&A portion of the evening. I also want to let you know that links will be posted in the chat throughout the event. So if there's a tool or something that we reference, more than likely we will add that link into the chat for you to have access. And most importantly, this session will be recorded, so you will have access to it after tonight's webinar. So again, I'll remind you about these things as we move on, but I am so very grateful that you joined us tonight. And the first person that we're going to hear from is my colleague, Dr. Erica Taylor, who is a senior research analyst within our Department of Research, to share a little bit of information about how we got to the place that we are as it relates to our student debt. So I will now turn it over to Erica.
Thank you so much, Dr. Perry. Good evening, everyone. I hope you're all well. Thank you for joining us. And I am just waiting for the slides to share. But as you've heard, my name is Dr. Erica Taylor, and I am a senior research analyst with NEA in the research department. And I've had the pleasure of working with an incredible team of my colleagues on this issue of student loan debt and its impact on educators. And I just want to take a few minutes to answer the question, how did we get here? And then I will share a few findings from our study of educators' financial circumstances that shed some light on this issue. Next slide, please. As most of you know, the task of financing college education has recently become more daunting for families. There are multiple factors that contribute to today's challenges because the landscape of higher education has changed. And from federal support, there are multiple factors that contribute to today's challenges, including declining support from federal and state government, divesting from higher education. Those costs are then passed on to students in the form of skyrocketing tuition costs, resulting in families having to pay a larger portion of costs that are significantly higher and resulting in increased financial responsibility for students and their families. Because of some of the things that I just mentioned, and likely many other factors, student loan debt has skyrocketed in the United States. In fact, fewer students have enrolled in college since 2010, and despite lower college enrollment, the nation's collective student loan debt now exceeds auto loan debt and credit card debt, and is second only to home mortgage debt here in this country. The problem is particularly difficult for educators because studies have shown that on average, and as many of you know who are joining us who are educators, that educators typically earn lower salaries as compared to professionals with similar education. Next slide, please. So while the increasing costs of higher education are having impact on current and former students nationwide, student loan debt becomes an even larger problem for some students of color. Long-standing and in some cases ongoing discrimination in employment, pay, housing, and the ability to maintain wealth-building assets like land and other forms of real estate have all contributed to race and ethnic differences in family wealth. For example, data from the 2019 survey of consumer finances suggests that the race-ethnic wealth gap remains relatively unchanged, with white families having 8 more times the wealth of the average Black family and 5 times the wealth of the average Latino family. The ongoing discrimination that I mentioned previously still occurs in lending practices, and lending for higher education is not immune. Recent studies have found that Black and Latino students pay more for borrowing the same amount of money for college as their white counterparts simply because of their race and ethnicity or the type of school they attend. For example, if they attend a historically Black college or university, or a tribal institution, or a minority serving institution. As I mentioned previously, teachers are paid less than those in other professions with similar amounts of education. This phenomenon, known as the teacher pay penalty, has a greater impact on aspiring educators of color. In fact, the National Center of Education Statistics data show that Black, Latino, and Native American teachers on average have lower salaries than white and Asian Pacific Islander teachers. As a result, it is safe to assume that the teacher pay penalty and exorbitant loan debt might be partially responsible also for teachers' shortages and the lack of diversity that we're seeing among the existing teacher force. Next slide, please. In our survey of more than 2,000 educators across the country, our study found that Black educators were significantly more likely than white or Latino educators to have taken out student loans. Our study also found that Black educators take out larger loans, often at less favorable rates, and end up earning less than their white peers, causing many to leave or avoid the profession altogether. Given that Black educators take out more in student loans, are offered loans with less favorable terms, and earn less, it makes sense that also in our survey, Black educators were significantly more likely to be carrying student loan debt. At the time of our survey, Black educators were more likely to have not fully paid off their loans, with 73% of them reporting that they still had a loan balance, as compared to 64% of Latino and 49% of white educators who participated in our study. Next slide, please. We've talked to a number of educators about their student loan debt, and they've been gracious enough to share their experiences with us. And here's an example of one from James Stewart, a high school science teacher in Maryland. My student debt from my doctorate is still in the 6 figures. I don't have regrets about my career choice in my education, but I do wish I had known more about what I was getting into, that I had a better understanding of these loans before I got started. So along with knowing what folks are getting into, it's also helpful to know that there's some equity and some fairness in terms of what you're actually borrowing and when you're borrowing and how you're borrowing it. And those are the kinds of concerns, and those are the kinds of things that are leading to this disproportionate number of Black and brown educators with exorbitant amounts of debt that they're having difficulty paying off. Next slide, please. In sum, student loan debt is a national crisis with far-reaching impact into families and communities. Institutional racism has exacerbated the negative effects of this crisis, and some studies suggest that student loan debt is one of the factors associated with the lack of diversity in the teaching force. Eliminating student debt and fixing broken loan forgiveness programs would go a long way in terms of helping our educators to afford basic needs and remain in the profession. Now you'll hear from Ronnie Lau, who will talk about what NEA educators have accomplished while addressing this critical issue. Thank you.
Thanks so much, Dr. Taylor. So I'll just wait for my slides to show up. So hi, everybody. My name is Ronnie Lau. I am a federal lobbyist with NEA's Government Relations Department. And so right now we're going to walk you through what public service loan forgiveness is and what the new temporary limited waiver that is occurring right now from the Biden administration, and how hopefully you can take advantage of this and get your loans forgiven over the next couple of months. Next slide. So let's start off talking about what is public service loan forgiveness, or PSLF for short. So this was a program that was established in 2007, and the promise of PSLF was simple. If you work in public service for at least 10 years and you make 120 on-time student loan payments on your federal student loans, you would get your debt forgiven. The Department of Education would forgive the remaining balance of your federal student loans. Unfortunately, though, and I'm sure many folks have seen this from the news and the couple of years of implementation, until this waiver that has been instituted by the Biden administration, the program had denied over 90% of applicants, which was egregious to say the least, and which is why this waiver is so crucial. Next slide. We also want to talk about who is eligible for PSLF. I've already seen a lot of things in the chat about, am I eligible for forgiveness, being this position, working for this public school district, working for a higher ed institution. So to put it simply, if you are employed full-time, which is defined as 30 hours or more per week by a public service employer, and this includes all public school districts and higher education institutions, then you qualify. To be even more explicit, this means that qualifying positions include also teachers, education support professionals, such as custodial staff, front office staff, food service workers, all those individuals, specialized instructional support personnel. So if you are a school counselor, a school social worker, or a school nurse, those individuals, you also qualify for this. And I also want to mention that if you're a higher education faculty, you also qualify for this program as an adjunct and contingent faculty member. So again, the basis of it is predominantly not really about what you do for the school. It is about who your employer is. If that employer is a nonprofit employer, or a government entity, such as a school district or a higher education institution, and you work full-time, you qualify for the program. Simple as that. Next slide. But as I mentioned, with the 90% denial rate, things weren't that simple. And so beyond the two criteria areas that I mentioned about working 10 years of public service and making 120 on-time federal payments, there were more additional rules that really made the program difficult to access for a ton of educators and other public service workers. So let's just start at the top. So right there, you also must have the right type of federal student loan. Again, PSLF only applies to federal student loans, but under the previous rules before the limited waiver, you must have had federal direct loans to qualify for forgiveness. A lot of our educators have loans that are also known as federal Perkins loans or federal FFEL loans, which is short for federal family education loans. Those did not qualify for PSLF initially, and there need to be additional steps for those folks to qualify for the program to get those forgiven. You also must have the right servicer. So your loans must be serviced by a loan servicer called FedLoan, which is run by FIA when at the time of requesting for forgiveness. So that's another issue that folks experience. You also must be in an income-driven repayment plan and have the right repayment plan by being in one of those IDR plans. A lot of folks were in standard repayment plans or amongst many other different types of repayment plans that are provided by servicers in the federal government in repaying their student loans. And many of those actually do not qualify as on-time payments to the 120 that I mentioned to qualify for PSLF. So you have folks that were making 120 payments in 10 years of public service, and they get to that finish line and they were told that none of their payments counted because they weren't enrolled in an income-driven repayment plan. And that was another major issue. Folks didn't qualify for PSLF initially. Also, again, borrowers must have to work for a public service employer. Again, to reiterate, this includes all public schools, colleges, and universities. And by doing that and how you prove that, you also have to certify your employment through fulfilling an employment certification form, which is part of the application for PSLF. And there are a number of differences and errors of folks that were doing when they're filling their ECF forms that provided their denial also as well. And then finally, as I mentioned too, your 120 payments had to have been on-time payments to your student loans. So these are monthly payments. They don't have to be consecutive. But the issue was that they have to be on time. They can't be a little too early, can't be a little too late, even a day. there were a lot of clerical errors that happened that made this issue really big. So some folks thought they were making on-time payments. Turns out they were only making 90 or maybe 80. And that was another major issue. So as you can see, the chances of all these different hurdles of what folks were experiencing were really stacked against public service workers from really qualifying for the program, and away from that initial promise about working 10 years in public service, making 120 on-time payments, and that was all you needed to do. But all these other different hurdles were making it significantly difficult. Next slide. So again, as I mentioned, there are so many technicalities. Again, we had folks that had the wrong type of loan, and folks that needed to do that needed to consolidate their loans, and were never told to do that and just continue to make payments on those types of loans. Again, they were making it a non-income driven repayment plan, so they were never advised to go into an income driven repayment plan and go change that idea. There were also ECF forms I mentioned from clerical errors, and again, they're lost in late partial payments that were never credited. Next slide. So NEA in the last couple of years took it really to account to try to make major fixes on behalf of all of our members and the educators and public service workers that failed to get access to PSLF. And so our NEA members, which is every one of you, helped provide 50,000 personalized messages to the Department of Education just this past year, and nearly 170,000 in the last 2 years. And together, we kept PSLF within the news for months to come. You can see right here, there are a bunch of snippets of different things that we did to help create the idea about what was going on with PSLF, what folks needed to do to make those types of changes that needed into it. And overall, the Biden administration helped heed our call. Next slide. So the result of it is this time limited waiver that I mentioned. So now it kind of goes back to the promise of what PSLF was originally about. You work 10 years in public service, you make 120 payments working for a certified employer, you qualify for the program. So now under this time limited waiver, it does not matter what type of loan that you have. So if you're in repayment for a FEL or Perkins loan that did not previously qualify, those payments will count towards the 120 that's needed. Again, doesn't matter if you've been denied forgiveness in the past, you can reapply again. And it also does not matter if previous payments, so say you're making payments in a non-income driven repayment plan, those will also be credited now to the 120 that's required. But the key picture of this is that you need to apply by October 31st of this year of 2022. The limited waiver is limited by the keyword there, and it only lasts for a couple of months. It started last October and lasts to this October of this year. So we've already been seeing experiences of folks getting loan forgiveness through the waiver, but we have only a time limited approach with only about 9 months left. Next slide. Sorry, 6 months left. My math there. Reforms by the temporary waiver. So this is just a comparison chart, and won't dive too far into this. And we'll be sharing some materials that has this chart around too. But again, it kind of demonstrates the previous rules of what folks had to experience and how they were ineligible previously, and what the temporary changes of the limited waiver grant. So again, if you had a different type of loan that wasn't a federal direct loan, like a FEL or Perkins loan, you're now eligible to make those payments towards the 120. Same thing with the non-income driven repayment plans and the partial and late payments. The one thing I did want to mention though, is that there were some cases that folks were told to consolidate their loans, despite that their loans and their payments were qualifying for PSLF in the first place. There was a reset button essentially. If folks were 80 payments in and were falsely told to consolidate their loans to apply for PSLF, they lost all progress of those 80 payments. Well, with the temporary waiver, those who were consolidating their loans and were told to, even though they didn't need to, all those payments made prior to consolidation will now also be eligible for the 120 under the limited waiver. But again, to reiterate another time, by October 31st, 2022 is when you need to apply for this program, because these changes only exist until that deadline. Next slide. And as I mentioned, it's working. So we have 70,000 borrowers, and over that probably at this point, because these numbers are from January, we had 70,000 borrowers who have already received forgiveness by the end of that month. We're a couple of months off. We haven't seen any new numbers in the Department of Education, but we know that number is significantly even higher. And of those 70,000 borrowers, student loan forgiveness has been granted just through that amount for those 70,000 borrowers. $5 billion is an insurmountable amount of debt that has been forgiven and changed the lives of so many individuals. And before the PSLF waiver, just to put it in perspective, PSLF only forgave just 16,000 borrowers in 4 years. So I mentioned that the program was created in 2007. And so the first wave of applicants came around 2017 after 10 years of service. And in just those 4 years from 2017 to 2021, we only forgave 16,000. And in these past 3 to 4 months, we've forgave 70,000 borrowers of their debt. And I'll also mention that just today in March, the Department of Education has identified that up to 100,000 potential borrowers may be eligible to receive forgiveness for $6.2 billion in an estimate amount of forgiveness, which is substantial. So we know that there's many more of you that are eligible out there, and we really encourage you to apply. And just there below, or just if you don't believe me, these are just some examples of NEA members that we've been working through this process. And these are the letters and the emails and the portals that they received, totaling the zeroed amount of debt that is happening. So this is happening to educators across the nation. This is happening to every single NEA member across the nation that is applying. So this is a great thing that y'all helped get done by helping press the word to President Biden and Secretary Cardona. Next slide. And so again, some success stories. So Jamie Walker Salas, who is an Iowa educator, she was forgiven about $100,000 in debt. And for years, she had tons of frustration with the process of PSLF. She was paying and paying, and the needle never really moved, as she quoted. But she finally received PSLF thanks to the temporary waiver by the Biden administration. And for her specific case, it counted some older loan payments that previously weren't ineligible. And she even got a small refund for overpayments, which is a possibility for a lot of folks. And then there's also Shirley Cavazos, who is a California middle school teacher. She got her debt forgiven for up to $47,000. And she is an individual who received so much bad advice from her loan servicers, who don't necessarily always work in the best interest for folks, in terms of, why would they want folks to get their debt forgiven and lose a customer, right, in this process? And they assured her that she was on track for PSLF. And then after that 10-year mark, as I mentioned, for most people, she found out that she wasn't eligible or hadn't met the requirements. But similar to Ms. Walker Salas, Shirley had earlier payments that before she consolidated helped qualify. And so after that, she also received loan forgiveness thanks to PSLF. Next slide. So let's talk about what you have to do. And there are some specific steps because it is a little complicated, and we're going to try our best to walk you through the process, but we also have some tools that we can help you do this too. So the first thing, and this applies to everybody if you have not applied for PSLF, go to studentaid.gov/PSLF and log in with your Federal Student Aid ID, or FSA ID, also known as. And if you don't have an FSA ID already, you'll have to create one. And the important thing about why you need to do this is because the Department of Education and the Federal Student Aid Office is using the contact information from FSA IDs to reach you about PSLF. And so if you need to make sure your contact information is up to date, or create an account so that you can have the direct contact email or any other digital form, or also through mail. That is how the Department of Education will be reaching you, which is why your contact information is so important there. So once you do that, there's a couple scenarios here. So if you're somebody that has a direct loan and you have applied for PSLF already, you should receive automatic forgiveness in the coming weeks. I know the Department of Education has received a ton of applications already, so there is quite a bit of a backlog. So we ask definitely for folks' patience. But we do have some steps that we can talk about if you haven't heard anything after applying. Next scenario, if you have a federal direct loan but have not applied for PSLF, you need to apply immediately for PSLF. Again, you need to do it before that October deadline. But we also encourage folks that even if you don't think you've made 120 monthly payments or 10 years of service in public service as an educator, you should still apply for PSLF. Because the thing is that when you apply for PSLF under the temporary waiver, it provides retroactive credit to, again, those things that I mentioned that were problems earlier. Again, it's a time limited basis. So if you applied afterwards, you wouldn't have access to those retroactive credits. So say you're an educator of 5 years and you apply for PSLF, but you know that you weren't enrolled in a repayment plan. You also didn't consolidate your loans yet when you needed to. Those will all get credited thanks to applying, even though you'll be denied for not hitting 10 years of service. We still encourage everybody to submit a PSLF application. It allows you to put yourself in the steps for the right track and making sure that loan forgiveness will be available for you at 10 years and 120 payments when the time comes. So definitely still apply even if you haven't met those two criteria. And then third, if you have a FFEL or a Perkins loan, you must consolidate your loan into a direct loan first. Then you apply for PSLF through the waiver before it ends on October 31st. Again, as I mentioned, even though it's retroactively crediting payments to those two types of loans, even though they don't initially qualify, consolidation is the only way you can turn those loans into a federal direct loan, which is why that needs to be done before you apply for the waiver. And then to begin your PSLF application, you can visit the studentaid.gov/PSLF page, and that will have a link to the Department of Education's PSLF help tool. And it's kind of like an easy way about how you can go apply for PSLF. It'll ask you a couple of questions to help verify your employment and do things that you'll need to qualify for PSLF, and essentially spit out an application for you of what you need to do. So that is the way to do it. The studentaid.gov/PSLF page is the way that you'll do the application process and also log into your FSA ID. Next slide. So how NEA can help. Obviously, we have a ton of materials and things that can help folks on this. But every NEA member can get free help for applying for PSLF because it can be a little complicated even with the help tool. And you can do that by going to neamb.com/savvy for our student debt navigator tool. And if you're not an NEA member, you can do so by joining by nea.org/join. And we have all these other student debt resources and FAQs available at nea.org/student debt support with the dashes in between. Emily Robinson is a Georgia high school educator who experienced some issues in terms of applying for PSLF, and she was rejected and she didn't really know why. And she used our student debt navigator by finding out from NEA Today from one of our magazines. And turns out the navigator helped her figure out that she was in the wrong repayment plan, and it helped enroll her in the process. And she got her $21,000 in debt forgiven. But I wanted to take this time to also share this with y'all and pass it on to Lindsay from Savvy, who is our partner that helped us create the Student Debt Navigator tool, which she will walk you through the process about what that looks like and what it does. So Lindsay.
Great, thanks, Ronnie. And it's great to be with you all this evening. I'm going to go ahead and share my screen. I've had the pleasure of working with the NEA team and NEA member benefits team and presenting on a lot of these webinars. So some of you might know me, and personally, I see some familiar names out there. So that's great to see. I'm going to just talk to you a bit about this NEA Student Debt Navigator that we've partnered with the NEA team to develop, and how it can hopefully help you and be a valuable tool in your sort of journey towards loan forgiveness. Before I just sort of take you through that, I just wanted to take a brief moment to sort of introduce who we are here at Savvy. I know there are sort of a lot of scam and nefarious entities out there, and I think it's important to communicate to you all who we are and the trusted resource we can be. So Savvy is a social impact tech startup based in Washington, D.C. We were founded by policy experts and advocates who have been working for over a decade to help borrowers and to sort of fight on the policy landscape. And finally, in 2017, that same year Ronnie was talking about, when all those borrowers got rejected from public service loan forgiveness, they decided to do something about it and developed a technology platform to essentially help borrowers not only better understand and manage their debt, but actually cross the finish line on a program like PSLF that had obviously been so difficult for many borrowers to sort of achieve success. So that's exactly what they did. The Savvy tool and services help borrowers to identify savings, whether that be through income-driven repayment plans, but I think most importantly, be able to navigate that process and, like we said, cross that finish line around forgiveness successfully. So the Savvy tool does a lot of different things, and there are a lot of different sort of ways in which you can utilize the free tool that we are offering to all NEA members. So when you go through the process, I'm about to show you this in a second here, you're able to see a personalized repayment and forgiveness plan. And this is really based on the information you're entering into the tool and is specialized and specific to you as a borrower. We keep on track and monitor all of any new programs and policy changes that may be coming about. The landscape is constantly changing, as you can tell already. And so, when things do change that are going to impact you, you'll receive, an email in your inbox right away. And then we also offer these sort of essential premium services. And again, NEA members are able to get those in their first year for free. And this is where we really take on the administrative burden of these programs, the applications, the paperwork, all of the things that can, I think, really bog down borrowers. Sometimes people call it application abyss, where for one reason or another, you're really never able to cross that finish line. It's denied, rejected, maybe incorrectly. And so that is something that part of the Savvy Essential Plan really helps borrowers to navigate and overcome. We digitize and pre-fill these forms, submit them on your behalf, and then actually monitor them to make sure the servicers are held accountable. And that if it's taking too long for the processing time, we will actually be following up with you and on your behalf. Because we've seen so many borrowers who to this day have really struggled, haven't heard anything, maybe were rejected inaccurately or incorrectly. And so that monitoring is such an important sort of part of this puzzle. And you're also able to work more directly with our student loan expert team here at Savvy. So to get started, it's very, very simple. You can either go to neamv.com/student debt, or I believe Ronnie had mentioned some of the links before and they were put into the chat. You can log into your NEA member benefits account. And from there, you'll have full access to the Savvy tool. And when you do sort of start your account and journey with Savvy, you'll first see this dashboard. And this is sort of like mission control for everything Savvy. It's where you're going to be doing a lot of things, but most importantly, it's where we help you to monitor those applications that I was just talking about. So sort of every step of the way is laid out, and each part of the process, there's sort of full transparency between the team here at Savvy and you as a borrower. That way you are able to see where you are in the process, what might still be needed to be done, et cetera. So you can sort of see the light at the end of the tunnel, and it's all really documented and very transparent for you. It's also where you can sign up for our live and interactive workshops. In addition to the amazing workshop being hosted by NEA here tonight, we host our very own on almost a daily basis, but at least at the beginning of every month for all of our users, where we talk about the recent announcements, walk you through the Savvy tool and answer all of your questions. They're very, very interactive and have become very popular amongst NEA members. Then once you're ready to sort of get started in the tool, it's a pretty simple process, and almost I could compare it to like a TurboTax for your student loans. We're going to ask you some questions around your tax filing status, your income, your employment. All of that is to help us identify that optimal repayment and forgiveness plan and what your eligibility would be. So this is simply a look at that family information that we're going to be asking about, some income verification, and then one of the most important parts, this employment. So we have a database of all of the public service loan forgiveness as well as teacher loan forgiveness eligible employers in the country. So when you start typing in your employer name, if it pops up in that drop-down menu, you're able to select it, and that's going to indicate it's eligible for forgiveness. And then we're going to ask you further clarifying questions to determine, the degree of that eligibility, especially around different Title I schools and things like that. All of those, it's sort of a smart skip logic. So depending upon what you put in there, it's going to ask the necessary questions. You're not only able to add your current employment, but any previous employment you might have had. And I really encourage borrowers to do this, especially given the waiver. You can add as many previous employers as you need to, but that allows us to be able to see the full extent of that employment history and what your eligibility for something like public service loan forgiveness might be. Then, for example, if you do add in a lot of that employment and we are able to basically verify on the spot that you could be potentially eligible for immediate forgiveness, we'll let you know. You might see something like this, a notification that's going to tell you. So that tool is really interactive and based on, like I said, the information you're entering in, it's going to respond accordingly. The sort of last step here is syncing your actual loans. So, most borrowers have on average 5 to 6 different student loans, right? Different disbursement dates, interest rates, balances. Very rare if a borrower were to know that all off the top of their head. I certainly don't, especially because my balance seems to be ever increasing. So we provide a loan sync, and basically what that does is it allows a borrower to, let's say, select their servicer, let's say Advantage in this case, enter in their servicer username and password credentials, and it's going to sync over a read-only snapshot of that data. So I know data and privacy security is really important to us. It's not giving us access or anything like that, but simply allowing us to see a snapshot of what's going on to confirm things like your loan balance, your loan type, et cetera. So if you're sitting here confused as to what type of loan you have, when you sync through the Savvy tool, it's going to be able to identify that for you and confirm whether or not you might need to consolidate or whether you're good to go as is. We use a syncing technology called Plaid, which is sort of a best-in-class syncing technology. If you have a Venmo account, you've used Plaid before to sync your accounts. So it's pretty ubiquitous. And after you synced your loans, you'll reach this sort of final step, and that's the plan options page, where we essentially outline for you, the borrower, what that repayment and potential forgiveness could look like. So we show you what that new monthly payment might be, the lowest monthly payment. Most of the time it's going to be on an income-driven repayment plan. Sort of what the total payment will look like by the time you're done or you reach forgiveness, and what that potential forgiveness could be, in how long, et cetera. And we show you a bunch of different options so you can sort of see what that looks like. You can expand below for more details and read more about the programs you're being shown. And then if you click continue on, you are able to enlist in our essential services, like I said, for free for that first year. And we're able to take care of all of the paperwork, not only for things like your income-driven repayment plan, but most importantly, I think for tonight, public service loan forgiveness, that employment certification form. We digitize all of that. We work with your HRs to get that signed off on your behalf, so you're not having to drive an hour, get it signed by hand, submit it to FedLoan, hear nothing. We manage that entire process for you. So just to wrap up here as well, you're able to contact our customer support team and our expert team through the tool, so long as you are an essential user and you can select that through the dashboard. Again, it's completely free. You'll be able to send a message to our team if needed, and we'll be able to help administer all of your applications and paperwork. So again, to get started, you can go to neamb.com/student debt, or I believe one of the links that Ronnie had put into the chat as well. So I'll turn it back over to the NEA team.
All right, thank you, Lindsay. Thank you also to Ronnie, and thank you, Dr. Taylor, for sharing that information. So we are about to dive into some of the Q&A. Before we begin, because I want us to be able to be uninterrupted when we're answering some of these questions, but I just want to remind you, I know you may have come in at different times, and this is a lot of information to consume all at once. So just as a reminder, we will be sharing this link along with some resources after the presentation, also on our NEA Today Facebook page. The recording will be there also. So just don't want you to panic that if you've missed something or if this information seems to be becoming too much all at once. You will definitely have access to this information. And even though we're going to try to dive into a few of the questions now, I just want to let you know that if for some reason we don't get to your question in the next 20 minutes, the NEA team will still do what we need to do to answer your questions. So once we send out the information, if you have placed your question in the Q&A box, you will receive an answer to your question, even if it's not specifically during this webinar. And I also want to say, I appreciate we've had over 500 folks tonight altogether, and there's a lot of things happening in the chat, but and we're grateful to those of you who maybe have gone through the process and have some information to share. But if you want to ensure that you get the most up-to-date and the most accurate information to your question, definitely use the Q&A function. Our team meets regularly. We have a standing meeting with the Department of Education. So the information that we provide you, when I say we, I mean myself, Ronnie, Erica, the information that we're going to provide you tonight is the most accurate and the most up-to-date information. So again, if you have questions, throw it into the chat. And if we are ready, I believe we're now going to start to tackle some questions. While I am waiting for, oh yes, so I see the first question. It says, should I reach out to my servicer with questions about PSLF? So who should those questions be directed to? And I guess for Ronnie.
Thanks, Antoine. So we would definitely recommend that you do not work with your servicer on this. As I alluded to earlier, a lot of cases we've been finding not providing the correct information. The biggest thing that we suggest folks to do, we have, as Antoine mentioned earlier, we have a ton of resources on the NEA website and a ton of FAQs to common questions that we've received from our NEA members that have been collated into a very, very large document. So if Annie or Laura could put that into the chat about how folks can access her NEA resources on the NEA page, that'd be super helpful. But we highly suggest folks to really rely information on two ways, either information from NEA directly or from the Department of Education's website themselves or the Department of Education's FSA website, opposed to directing questions to your loan servicer. Because we have found, and you'll see this in the news all the time too, that a lot of folks have been getting incorrect or wrong information that is not most up to date from the loan servicers.
Thank you. Ryan, I do have another question, and Erica, I may have a question for you in a moment, but how does the payment pause affect those who might be considering applying for a PSLF? The question says, we're in a pause right now. Do these months during the pause count towards public service loan forgiveness?
Yes, short answer is yes. So the payment pause that was granted by the CARES Act and all the different COVID relief efforts done by the president and done by Congress all count as if you were making payments or PSLF. So even if you haven't been making payments for these last 2 years because of the COVID relief from that pause, those count as if you were. So those 2 years, for example, that counts as 24 months of progress towards PSLF.
Thank you. To give Ronnie a quick moment to catch his breath, Erica, I did see in the chat earlier, from the information that you shared as it relates to the data, is there a breakdown of specifically how folks are affected by student debt based on ethnicity, for example? Do you have it broken down in that way?
Have it broken down for the groups that we were able to report, because some of the groups were relatively small and we could not report those, but we do. When you say impact, I guess I'm not entirely clear on what that means, but we do have a lot of that information broken down by ethnicity, race and ethnicity. Yes.
Okay.
I will put the link to the report in the chat, and then that folks can take a look at that. And if you have specific questions about specific groups, please feel free to ask that as well.
Thank you. Another question, Ronnie, are private loans part of the loan forgiveness program?
Simple answer is no. So public service loan forgiveness or any type of federal loan forgiveness that is granted by the federal government only applies to federal student loans. So if you do have a private student loan from a private bank or a private lender, those do not qualify. I will elaborate, though, that there are some types of loans that are commercially held that are serviced by the federal government. Things that are like commercially held FEL loans or Perkins loans that are held by your institution of higher education that you attended. Those do qualify because it is a part of a federal program, because FEL and Perkins are federal programs. The money is just being held by a different institution. So as long as it is a federal student loan done by a federal program, then it will qualify for PSLF. But if it is a private student loan from a private bank, say like from Bank of America, for example, those do not qualify.
Right, thank you. They're bubbling up in my window, but Ronnie, something I've seen a few times is folks asking how the Parent Plus loan fits into the scenario of public service loan forgiveness. So can you explain that distinction with Parent Plus loans?
Yes, so Parent Plus loans do qualify for PSLF because it is a federal student loan program, and Plus loans are federal direct loans. So they do qualify for PSLF. But the unique thing is that I want to mention is that Parent Plus loans do have to be consolidated before they do qualify. So that is one step that you need to take. If you have a Plus loan that is done for yourself for a graduate degree or a doctoral degree or further studies, or even for your undergraduate program, Those don't have to be consolidated, but plus loans do, because those loans technically are not for yourself, they're for a dependent. So in order for those to qualify, you do have to consolidate. I did see also a common question that we've gotten to is that what if the plus loans are in the name of your repayment of your spouse and not in terms of yourself? And in that situation, it depends on if you work in if both of you work in public service or not. If your spouse does not work in public service, then it would not qualify in that aspect. So making sure that the plus loans are in your name, then you do qualify for that aspect, but otherwise you do need to consolidate for them to count for PSLF. I'll also mention that under the temporary waiver, even though it's granting retroactive payments on different types of federal student loans outside of federal direct loans, plus loans are not being granted for retroactive payment because they, again, the purpose of PSLF is to forgive the debt of those who are working in public service, not to forgive those who are their dependent students. So that's why that exception is there from the temporary waiver. But still, overall, they do still qualify for PSLF. You just have to do a couple of steps with consolidation.
Thank you. Now, obviously, I think many of us have heard in the news over the past several months that there's been a lot of servicer movement. So I see a question: if you had Navient, for example, and have now transitioned to a new servicer, will that affect the PSLF process?
So that won't affect the PSLF process. I mentioned that you do have to have Fed loans as your servicer to receive forgiveness. The key thing to that is you have to have Fed loans as your servicer at the time of forgiveness. So even if you're on track at the moment right now, making your way towards 120 or 10 years of service, you don't have to have Fed loans to be your servicer right now. But by applying for PSLF, your loans will be transferred to Fed loans automatically. So that process is done through that aspect. So don't worry, even if right now you don't have Fed loans as your primary student loan servicer, that's not a huge issue. Again, once you make your application, your loans will be transferred over.
Thank you. Again, just as a reminder, we're kind of fielding through the questions. If for some reason we don't get to your question in this moment, we will definitely answer once we send out the information. But Ronnie, I now see a question related to Perkins and FFEL loans. So if an individual had a Perkins loan or a FFEL loan, I know you said earlier in the presentation that those were types of loans that were previously ineligible for PSLF. But can you explain again briefly for those who have Perkins or FFEL loans, what their process would be related to public service loan forgiveness?
Sure. So again, if you have a FFEL or Perkins loan, you need to consolidate your loans before you apply for PSLF. The good thing about the limited waiver is that it will grant previous payments you've made on those two types of loans towards your progress to 120 payments to get PSLF. But you will need to consolidate those loans first off and then apply for PSLF, and then you will get those eligible forgiveness. And also to again reiterate, even if you haven't worked in public service and in the education sector for 10 years or made 120 payments or believe you haven't made 120 payments, we still encourage you to apply for PSLF. Because again, if you have a Perkins loan, if you have a FFEL loan, or if you weren't in an income-driven repayment plan previously, then you need to apply for the waiver so that you get that retroactive credit. So then once you meet that criteria of 120 payments or 10 years of service, public service loan forgiveness will be there at the end of the day.
Thank you. I believe you've actually iterated this a few times, but there are quite a few folks who may be retired now or have been teaching for decades. And I just want to know if you could just quickly reiterate the specifics about payments after 2007 and PSLF being primarily based on the payments and not necessarily the years, because I see quite a few folks who are asking about PSLF, but they're now retired, and would they still be eligible for public service loan forgiveness?
Yes, this is a question we get a ton too, and this is a little bit of a complicated one. So bear with me here, and I'll try to be as clear as possible on it. So because PSLF was created in 2007, it doesn't look at repayment beyond those years or years of service beyond those years. So if you're a retired educator and you retired recently, you may be still eligible because the key thing is that it looks at employment eligibility after 2007 and payments that are made after 2007. So if you're retired after that and you've worked 10 years of service and made 120 payments on your federal student loans after 2007, then you could still qualify for PSLF. So that's a really important distinction. So that's how you'll use to calculate is that 2007 mark. As long as you meet, again, the 10 years of service and you worked in schools for 10 years after 2007 and made 120 payments in your federal student loans, then even as a retired educator, you could still qualify.
Thank you. So this next question, I know the simple answer is yes, but I just want you to, if you would stress again why we're asking folks to do this. So the question says, are you saying we should at least apply before the deadline, even if we're not currently eligible to receive public service loan forgiveness? So can you explain again why it's important for folks to apply for PSLF, regardless of whether or not they're at the 10-year mark of payments or not?
Yes, that's correct. We definitely encourage you to apply even if you don't think you're at that mark. And that's because, again, applying is the easiest way for the Department of Education to track your progress. Right now, unfortunately, and this is something that NEA has been advocating, is that there's no simple way to track folks' progress about where they are in terms of their line for forgiveness. And the easiest way to do that is just to submit an application and certify your employment. And again, like I said, the limited waiver is only available to October 31st of this year. And after that, we're going to be unfortunately returning to the program to the previous issues that we've had. And so in order for you to get retroactive credit to, different repayment plans you've been enrolled in, if you're in a different federal student loan, this is the easiest way to get you on the correct pathway to forgiveness within 10 years afterwards. And also the other thing too, is that once you apply, it will automatically, like I said, consolidate your loans. Like I mentioned, if you needed to consolidate your loans, like you've had FEL loans or Perkins loans, that's essential for you to make sure that you're on track. And two, of course, putting you in an income-driven repayment plan. So again, applying you puts you forward in the right track to get forgiveness within 10 years.
Thank you. There's a question that says, I have made 10 years of payments, but I have not made 120 payments. So does it have to be actually 120 payments, or if there's been 10 years of payments, would that make one eligible for PSLF?
Yes, so it has to be 120 payments total. Unfortunately, you can't pay ahead for PSLF, which is why it's on that monthly mark. The 120 derives from the 10 years of service, essentially. So if you have 10 years of service with each month that you're making a payment, that is how they came out with the 120 payment threshold. So that's the distinction between the two.
Thank you. We're going to try to get a couple more in here very quickly. I'm not sure if this is enough information to answer, but it says, can I change my income-based payment in order to receive public service loan forgiveness?
So if you're already in an income-driven repayment plan, I know that there are a couple of different types of income-driven repayment plans out there used to qualify for PSLF. So there are a couple of options, but again, the most essential thing is that you need to be enrolled in an income-driven repayment plan. So it doesn't really matter what type of income-driven repayment plan, as long as it is one, then you will have this qualify for forgiveness.
Right. Now, I also want to ask, can you explain what full-time employment means as it relates to PSLF? Because I've seen a few times if substitute teachers can qualify. And then also, does it matter what level the degree was that a person received at in order to be eligible for PSLF? So it could have been a graduate degree, for example.
Yes, so for substitute teachers, again, the biggest thing is whether you're a full-time employee or not. So as I mentioned, how they define full-time employment is whether you've worked 30 hours a week within your school district, essentially. And then beyond that, you should qualify if you do meet that criteria because you work for a qualifying employer, which is a public school district, that being a government entity. So with that said, for substitute teachers, I definitely understand it might be a little unique. If you're a substitute that is, say, a permanent substitute for the school district and you predominantly work as a substitute teacher throughout different schools, you probably qualify because you probably do work over 30 hours a week. But that's the main criteria for that, again, is working full-time as 30 hours a week or more, and also working for a qualified employer, which many of you are because you work for a school district. And in terms of whether the type of degree that you have attained, that does not matter. So if it's for a if it's that occurred for a bachelor's degree or graduate degree or doctoral degree, all of that is eligible for forgiveness. What matters is whether that debt is from a federal student loan program, and that is the main criteria.
Thank you. And then just one last one, and then I'll share some information with everyone because, again, I don't want you all to be panicked. If your question isn't specifically addressed in this moment, we will address all the questions that were put into the Q&A, and that will be sent out along with some other helpful information, along with the recording from tonight. But Ronnie, if you could just, again, briefly let us know that if someone is looking for help for applying for public service loan forgiveness by that October deadline, what are some of the tools that they should be utilizing in order to see how close they are to receiving it, but also just any tools that you can recommend that they utilize to get started in the process?
Yes, so again, the biggest thing you can do is visit to the NEA member benefits page to our student debt navigator. Again, we partner with the folks at Savvy, with Lindsay, to go help with this process about how we can make this as easy as possible for our NEA members. Just to reiterate again, this is a free service for our NEA members. So if you're an NEA member, you can have access to Savvy at your disposal to help with these situations. And even for complicated situations that you have, where say the help tool through the help tool that's provided by the department or through the Savvy Student Debt Navigator, Savvy has customer support folks that are helping each and every one of our NEA members with their specific cases, and not, skirting around corners or anything like that, but providing clear and concise ways about how they can access forgiveness. So I know we put it in the chat earlier, so if we could put that again, just through how folks can access the Student Debt Navigator on our member benefits site. But then also we have all the numerous resources that NEA has provided just about the PSLF waiver in general. We have a FAQ that is very, very long for many common questions like the ones we answered today, like ones that we've answered for previous webinars as we communicate with other members about this. There's more than likely a question that you've asked answered by that Q&A also as well. I know we're going to answer these questions as best we can also through the log afterwards, but you may have an answer to that question also within the Q&A and the different resources that NEA has developed, and that can all be accessed on the NEA website. We have a lot of student debt resources right there for your disposal.
All right, well, thank you again to Ronnie Lau. Thank you, Dr. Erica Taylor. Thank you to Lindsay Clark and all of you who have been here tonight. As we close out, I did see one comment that I think is probably the sentiment of a few folks here. It says, this is a lot of information. It's very confusing, and I'm going to need someone to hold my hand through this process. So we want to let you know, what we primarily wanted to do tonight and accomplish is getting the information out to you, and also give you access to us. Again, any question that was in the Q&A, we will do our best to reply to that and send that information along with the presentation, along with other helpful links. But we definitely recommend that if you want some help immediately, that you reach out to Savvy. If you are an NEA member, if you're not yet a member, please join, because someone at Savvy will be available to you immediately once you become a member. But there's also the help tool on the FSA website. But again, we will be sharing this information with as many folks as possible, because it will only be beneficial to us the more educators receive public service loan forgiveness, whether you are a substitute teacher, a classroom educator, an educator who is in higher education, whether you're an ESP. We want to be helpful to you. So again, lots of information. We thank you for joining us tonight. But again, we will do our best to get back with you as soon as possible with some of the questions that were in the chat. We thank you. And while we're closing up, again, please feel free to drop a question within the Q&A so we can be sure to address it. And we thank you for your time this evening. Thanks, everyone.
Thanks so much, everybody.
Good night, all. Thank you.